Well, Starbucks investors will be watching how Niccol handles the relationship with its baristas. Some 450 stores are unionized, along with digital strategy, rewards, using advanced technology. Joining us now is Barclays Bernstein, equity research analyst at Barclays, who covers both Starbucks and Chipotle. He raised his price target on Starbucks today to 110 from 93 bucks a share. It's good to have you on today. I mean, right out of the gate, the fact that the stock surged on this news, what does Niccol bring to the table? And I asked that question knowing that when he took over at Chipotle, that was a little bit of a turnaround story, too. And there was a founder in the background at that company as well.
Yeah, no, thanks for having me. Niccol brings a lot of great things to the table. And you highlighted a bunch of them earlier in terms of the ability to really focus on operations and speed of service and customer engagement and loyalty and whatnot. But to your point, Chipotle was recovering from a food safety issue, so it was a pretty linear recovery. Here with Starbucks, there's a variety of headwinds going on, both in the U.S. and international. But as you mentioned, based on the stock performance today, you could tell investors are excited to have a restaurant executive who is well-known join the helm, and it does open it up to large-cap growth investors that I think have been hesitant to buy up until now. So you did have a kind of a fear of missing out throughout the day today where people wanted to get in on what still is a tremendous long-term growth story.
What's the first thing he should do at Starbucks to right the ship?
Yes, hopefully spend some time in the restaurants just to fully understand what it means to wear the green apron and how to deal with customers in a very busy environment. But otherwise, the first thing he needs to do, I think, is really focus on operations. He doesn't want to necessarily come up with a new marketing campaign that's going to drive in a ton of traffic if the stores aren't ready for that traffic. So first and foremost, it needs to be all about speed of service and operations, making sure you can get the customers through the line, at which point then you turn on more aggressive marketing and focus on the loyalty program, bring more people into the stores. There are a lot of levers for Brian to pull. I'm sure he's super excited about the opportunity.
Chipotle sold off a bit on this news, but there's a COO that's going to take the helm there as well. And you've got longtime CFO Jack Hartung has basically agreed to come on into a new position, shift into a position as well. So what does the bench look like at Chipotle?
Yeah, I'm surprised with the sell-off in Chipotle today. I guess to be fair, though, when you have a CFO recently announce his retirement and then a surprise CEO departure, nobody likes to see that level of instability. But with that said, Chipotle's got incredible momentum, very strong brand appeal, fighting through a very difficult operating environment. We don't think they're going to skip a beat with their interim CEO, who I'm sure will be considered for the potential full-time position. And with Jack Hartung, he has been around a long, long time. He knows the CFO role. He will help in terms of still overseeing and helping the new CFO while at the same time sitting in the president role. So he's a tremendous asset for them. We don't think Chipotle shares should be under that level of pressure.
You had multiple activist investors piling into Starbucks. When you look across your coverage universe, are there other names, maybe storied names that are in need of a turnaround or fresh leadership that we could see a similar dynamic now play out? Because it does seem like they're, at least in this particular case, it's a strategy, it's an investor game plan that is yielding results.
For sure. I mean, if you just look back to Chipotle, they had, Bill Ackman from Pershing Square, who was an activist before Brian came in, Brian Niccol, that is. So Brian's used to working with activists. We have a number of names that in the past few years have already had activist investors. So it's a very popular sector for activists. We've got a couple going on right now. So we expect to hear more from shareholders who have been frustrated with the rate of change or the success of the brand. It's just a difficult time right now because you are dealing with a slowing economic environment. So no brand is immune. You're likely to see industry trends continue to slow as they have in recent months. But again, having an activist investor, oftentimes they don't even have to ruffle a lot of feathers, but just being there to offer the opinion of shareholders and work with the board, you can definitely see the fingerprints of change.